Dear viewers, welcome to another Cryptoverse weekly report. After stopping above $99,600 last Friday, which also represents a new record, the price of Bitcoin bounced back to below $91,000 on Tuesday amid strong selling or profit booking. In fact, this was not at all unexpected, although many have already seen that psychologically important level of $100,000 being passed. A breakout of that level will once again bring Bitcoin to the headlines and almost certainly result in perhaps unprecedented FOMO. Suddenly, at that price, everyone will want to buy the leading crypto that they could get 3 times cheaper just a year ago. But that's simply how it is. Still, let us go back to the correction. It stopped at only 9%, which, considering the truly spectacular growth that followed right after the elections, is actually quite incredible. Much more logical, and even more historically grounded, would be a stronger withdrawal of, for example, 20%. But nothing of that so far, as the bulls seem to be taking control again. And today, among other things, we bring you: is the Bitcoin correction over? Is BTC preparing for another attack on the $100,000 level? Despite the sell-off, the volume of the leading crypto on the exchanges continues to fall. The peak of the cycle is far away. The bull run will last for months. Ether seems finally ready for a major breakthrough. Is altcoin season just around the corner? Let's start the report. Investors are now looking for signals as to whether Bitcoin has found support from Tuesday's drop to 91K and is setting the stage for another attack on 100K, or whether another, deeper correction will follow before reaching that significant target. As things currently stand, though, it's more likely to be the former, as the market is now largely cleared of so-called paper hands. BTC balances on crypto exchanges continued to fall, and ETFs returned to inflows on Thursday, albeit rather softly. Spot BTC ETFs removed $103 million worth of Bitcoin from the market on Thursday, snapping a 2-day streak of net outflows totaling $558 million. However, despite the slowdown, ETFs still had a record month, with more than $6 billion in net inflows. Speculators and short-term holders who wanted to sell BTC and collect profits are likely to have done so now, just like long-term holders whose liquidation of holdings was largely responsible for the price drop of the leading cryptocurrency. Namely, although they have largely refused to give up Bitcoins, long-term owners have dumped 728,000 pieces worth about $67 billion on the market in the past 30 days or so, which is the biggest sale since April. Despite this, and rather interestingly, the amount of BTC on centralized exchanges continued to fall, dropping below 2.4 million Bitcoins, which represents the lowest levels since November 2018. The decrease in BTC balances on exchanges suggests that there is less supply available for potential sale as investors move funds to self-custodial wallets. This in turn implies that the invisible hand of the Bitcoin market has simply transferred from paper hands to diamond hands, that is, the hands of those who plan to hodl and who expect additional price growth. And now that the sell-off is behind us, it is quite possible that corporate demand will come to the fore again, led by MicroStrategy, which in the last tranche alone added a new 55,500 Bitcoins to the portfolio, but also by players who copy Michael Saylor's strategy, such as Metaplanet, Semler Scientific, and Marathon Digital, the world's leading Bitcoin miner. And what the disproportion between supply and demand means for the price is well known to everyone. With today's intraday price range between $94,700 and $97,500, Bitcoin is currently in a consolidation that may take some time. But on the other hand, it would not be at all unusual for it to break the 100K level by the end of the month, as it needs roughly only 3 to 5%. Also, if you look at BTC's monthly gains, the leading crypto is currently up 36.5%. And November, traditionally the best for Bitcoin, brings an average of 46% returns, so even 10% more. And if Bitcoin had crossed $100,000 on Thursday, the 28th, it would have been a rather incredible sequence of historical coincidences. Maybe there would be some new conspiracy theories because we know how popular they are lately. Are you wondering why? Well, because November 28th was the date when BTC reached a price of around $1,000 in 2013 and $10,000 in 2017. However, this time we will have to wait a little longer. But almost no one disputes that the months of that parabolic phase of growth will follow. The peak of the cycle is still far away, not only if you compare this cycle with the previous ones, but also if you look at the metrics. As analyst firm CryptoQuant noted in its report, the value held by new Bitcoin owners lags well behind previous cycle peaks. The shares of new investors are currently slightly above 50% of total investments in cryptocurrencies, while in the previous peaks of the market, in 2017 and 2021, they were over 90 and 80%, respectively. These numbers come from the relatively early phase of the bull run, in which retail has not yet entered. Once retail comes in full force on the wave of FOMO, it will mean we are approaching the peak of the market cycle, says CryptoQuant. Of course, this bull is a completely new animal, driven primarily, relatively speaking, by institutional capital, money from corporations, TradFi, and even countries. But retail will hardly be absent, especially if global monetary easing and liquidity injections continue, above all, in the largest world economy. Namely, it is predicted that during 2025, the U.S. Federal Reserve will increase the so-called M2 global money supply to more than $127 trillion compared to the current $107 trillion, which represents a potential growth of $20 trillion, or 18%, says Jamie Coutts, chief crypto analyst at Real Vision. According to Coutts, a significant amount of capital could flow into crypto, primarily Bitcoin. Specifically, based on historical data that BTC has attracted approximately 10% of the newly created money supply, this would mean that approximately $2 trillion will flow into the digital asset. That sounds pretty incredible, especially considering that BTC's current total market capitalization is less than that, at around $1.9 trillion. According to Coutts' predictions, the global M2 money supply should peak at the end of the first month of 2026. Growing fiat monetary depreciation could strengthen institutional adoption of Bitcoin due to its high returns, which are 113% annualized and significantly outperform traditional investment vehicles, adds the Real Vision analyst. And the fact that the total market capitalization of stablecoin, the primary means of buying other digital assets, has jumped to a new peak of an incredible $190 billion, shows that the crypto market is heating up strongly. Therefore, the liquidity of stablecoins is also increasing. When, for example, Tether prints its market-dominant USDT, it means that someone needs it, and that someone needs it, in most cases, precisely to buy some other crypto. Of course, as always happens in a bull market, there is no shortage of price forecasts for the leading cryptocurrency. Dan Morehead, the founder of Pantera Capital, the first cryptocurrency fund in the US, this week came out with an estimate of $740,000 per BTC by 2028, when the total market capitalization will be about $15 trillion, according to him. Morehead compared his purchase of the first tranche of Bitcoin in 2013 to buying gold 1,000 years before Christ, and he seems to have hit the spot. His fund has grown by more than 130,000% compared to the initial investment. On the other hand, investor and billionaire Tim Draper in the not-so-distant future sees BTC with a growth of 30 times compared to current levels, approximately at $3 million. If we look at short-term forecasts, we should mention the one given by the founder of Cardano, Charles Hoskinson. Hoskinson thus expects Bitcoin to jump to between $250,000 and $500,000 in the next 12 to 24 months. However, the founder of Cardano, unlike Draper, who only forecasts, has a relatively good explanation on which to base his optimism. Namely, Hoskinson believes that BTC, with all its existing attributes, such as that of digital gold or protection against inflation, will dominate the DeFi arena within 2 to 3 years. This is a statement that would have sounded incredible until a year ago, but innovations, new ideas, and projects are being born through which BTC will really join the world of decentralized finance. The founder of Cardano thus mentioned a new model called DeFi mode, created precisely to bring decentralized financial possibilities to the Bitcoin blockchain using the Cardano network. Users can now enable DeFi mode by bridging their Bitcoin into a wrapped token on the Cardano blockchain. This integration allows Bitcoin owners to tap into decentralized financial ecosystems, trade on decentralized exchanges, access yield-generating instruments, and retain full custody of their private keys, Hoskinson explained. As a reminder, last month the Cardano development team announced the Cardano Bitcoin Bridge built on the Grail protocol. And while Bitcoin is consolidating, more and more altcoins are waking up. Whether the rotation of capital into alts has started is not entirely clear yet, but the fact is that almost all leading altcoins are outperforming BTC with weekly gains. The encouraging news, especially for all those who are waiting for, if not the alt season, at least the alt preseason, is that Ethereum seems to have woken up from its winter sleep and may be ready to attack the $4,000 levels and then the new all-time high. Adding further positive momentum to Ethereum was the performance of its ETFs, which outperformed BTC ETFs this week with 4 consecutive days of inflows, bringing the total net gain to $244 million. So Ethereum has come alive after spending most of 2024 lagging behind its competitors. While Bitcoin and Solana have already reached new price records in this cycle, Ether, the original coin of the Ethereum blockchain, has remained stuck in their shadow. And while it remains 26% away from its all-time high of $4,888, it has rallied against BTC by 19% over the past week, marking its strongest weekly performance in months. The data also shows that the total value of assets locked in Ethereum-based applications has risen to $65 billion as of Wednesday, a figure last seen on May 5, 2022. The increase is significant not only because of its size, but also because of what represents a potential shift in the mood of market actors towards Ethereum, the king of smart contracts that many have written off for this year. Accordingly, there could soon be a significant rotation of capital from Bitcoin to Ether, but also to other altcoins, especially if BTC continues to decline from 100K, according to the crypto trading company QCP Capital. And that can be seen in the decline of Bitcoin dominance, which fell from 62 to 58%. This could lead to the pre-season and a new highest price of Ether, but also a good part of the leading alts. Namely, although altcoins have shown great strength this year, a real mega takeoff is still expected. Although things are changing now, the focus is still primarily on Bitcoin, powered by billions of institutional capital pouring in through a regulated product, ETF. Apart from Ethereum, other altcoins do not have this privilege, so they de facto exclusively rely on the users of crypto exchanges. And they are mostly retail which, as we said, has not yet been nearly as active as in previous cycles. If we look at the weekly performance of the leading alts, Ether jumped almost 8% to $3,600. Solana is down 6%, which is normal because it reached a new all-time high. So, as always happens, some investors sold and booked profits. XRP rose strongly again, as much as 16% to nearly $70, just like Cardano's ADA, which is now changing hands at $1.06. BNB is in plus 5 and Doge 2.7%. As for the biggest weekly winners in the top 100, Virtual is on top with almost 170% growth, followed by Sand, XLM, Algo, and TIA. As you can see, it's quite amazing that among the winners with the highest pluses, there are no meme coins at all. And so, with altcoins, we have come to the end of another Cryptoverse weekly report. If you liked the video, please give it a like, leave a comment, and we would also greatly appreciate if you click subscribe. Thank you for following, and kind regards.